Hello and welcome to today's presentation where we have ViaCon Group presenting its Q2 report for 2024. With us presenting we have the CEO Stefan Nordström and CFO Philip Delborn. After the presentation there will be a Q&A, and if you'd like to ask any question, please feel free to use the form and we'll take that up during the Q&A. And with that said, please go ahead with your presentation.
Thank you very much. This is Stefan, the CEO of the ViaCon Group. We intend to go through. Sorry, we just have a little challenge in changing the slides. As usual, we will talk about the latest quarter, in this case Q2, in brief, and then I will cover what we see in the market today and the outlook of it. Then Philip, our CFO, will talk about the Q2 24 financials. I will come back with, as usual, some highlights of our business, and today I will share new recognitions and awards we have received this year for innovation and sustainability. And then the Q&A, as stated a few minutes ago. So if we look at Q2 in brief, first of all, we continue to see a cautious market in Q2, which was holding back sales for us. The underlying demand and need for our solution continues to be quite strong, but there is still hesitation in the market, and this leads to delays in order-making decisions from several customers. And the main reason for this situation is, of course, the continued macroeconomic uncertainty combined with an even more challenging geopolitical situation right now. Looking ahead, we actually do expect a cautious improvement of this situation in the second half of this year and into 2025. This means that we have started activities to further strengthen our competitiveness because we are prepared for continued volatility in the market. So we have launched several activities already to further strengthen our competitiveness. And these initiatives are targeting, of course, additional growth opportunities, but also selected efficiency measures. And the activities will have short and medium-term effects, whilst, of course, still supporting our long-term strategy. But it's not everything that is negatively affected by this market situation. There are several strong areas in ViaCon throughout Europe. One example here is Turkey, where we continue to see a very high demand for our bridges and culverts solutions. And in Turkey, we actually had an all-time high revenue in the first half of this year, and also with a strong pipeline into the remaining part of 2024. And the demand is coming from, of course, a very powerful earthquake that we saw in February 2023, but also from new infrastructure projects. And the last part here is very interesting and very important to us because it means we are gaining shares on behalf of the alternative materials. And in this case, this is almost exclusively concrete in Turkey. So we have a little bit of a breakthrough situation, which continues with good expectations into the second half of this year. So a little bit more detail on how we see the market and the outlook. And I think the first bullet here is more or less what I said on the previous slide. With a macroeconomic uncertainty, the geopolitical situation is, of course, affecting the markets negatively. Still, we do see quite a robust demand for sustainable infrastructure solutions that we offer. And this makes us cautiously optimistic when it comes to the second half of this year and beyond. One important part of this is the Polish market. And with the change of government at the end of last year, a lot of previously frozen EU funds have gradually been made available to Poland during the first half of this year, but we have not yet seen the effects of this. But we do expect that further investments will now be done because they have been held back for the recent years, and they will gradually resume towards the end of this year and into the coming years. And also outlook-wise, the efficiency work that we performed in the second half of 2023, combined with the new activities that we are now launching, this will together strengthen our competitiveness even more, and allow us to even better manage a continued market volatility going forward. So I hand over to you, Philip, when it comes to the financials.
Thank you, Stefan. And let's start with a group summary of the second quarter. And we came in with a sales of 46 million in Q2, which is a decline of 7.7% and a negative organic growth of 5.9% in the quarter. And the difference between the total growth and the organic growth is related to currency fluctuations and hyperinflation adjustments that we've made. What we do see is a positive sales development in bridges and culverts. I will come back to that in a couple of minutes. And if we look at the EBITDA for the group in the quarter, we had an EBITDA of 3.1 million euros compared to 5.4 million last year. And it's a decline that's linked to the drop in the top line, of course. If we look at the first 6 months of this year, we are actually slightly above last year, both in terms of EBITDA and in terms of margins. The organic growth in the quarter was 1.6%, and especially with a strong growth in bridges and culvert solutions. Then if we take a closer look on our 3 business units and start with the bridges and culvert solutions, here we see very strong growth both in sales and in order intake. The organic growth in the quarter was 18.7%. And as Stefan mentioned, we continue to see very high volumes in Turkey, and that's supporting the growth in bridges and culverts in the quarter and in the first half year. Also, we have an hyperinflation effect impacting both sales and cost coming from Turkey. If we look at the EBITDA, we see a decline in margins and in EBITDA, and that is linked to the strong growth that we've had in Turkey. In Turkey, there is a different competitive situation in the market where the competition from alternative materials such as concrete is quite strong due to the market demand for sustainable solutions, which is not really on the same level as we can see in the rest of Europe yet. So we have a mix in the geographical sales impacting the margins in the quarter. And the organic growth, very strong in the quarter, 40.7%. Going into the second business unit, which is geotechnical solutions, here we can see an organic growth of minus 16.6% in the quarter, which is linked to the market conditions that Stefan described earlier. And there is an hesitation in the market right now for placing orders, and that is impacting geotechnical solutions quite significantly. What we do see is that the part of this business unit where we base our solutions on internally produced products is growing, but on the other hand, the volumes coming from externally produced product is declining in the quarter. Looking at the EBITDA, we see a minor decline, and that's linked to the lower sales, of course, but it's not mirroring the full drop due to the efficiency work that has been performed since last year. And if we look at the organic growth, it's negative 29% in the quarter due to the market conditions. Then the third and final business unit, stormwater solutions. a bit similar to what we've seen in geotechnical solution, a negative organic growth in the quarter of 18%. And the majority of the decline is actually coming from the UK market, where we see a clear hesitation from placing orders, and that is impacting the quarter negatively. And this is also, of course, hurting our EBITDA and the margins in the quarter. Looking at the order intake, it's in line with last year, so the drop is more significant on the top line here. And then finally, a couple of words on the cash flow and the financial position. We have cash flow from operating activities of minus 4.2% in the quarter, compared to minus 2.4% last year. And the effect from changing working capital was minus 1.4 million this year, and minus 4 million the year before. And this has also been impacted by the change in currency gains and losses, which are actually 3.5 million less compared to last year. In terms of CapEx and investments, we invested 1.1 million during the second quarter this year, compared to 0.7 million the year before. And then if we look at the net debt, it was 103.4 million end of June this year, which is slightly lower than the same period last year. And if we exclude the lease liabilities, it was 91.9 million. And the cash situation, we have cash and cash equivalents of 19.5 million end of the second quarter. And we had 15 million the same time last year. But we have drawn 15 million from the revolving credit facility compared to 10 million a year ago. And in terms of equity, we're at minus 3.5 compared to minus 2.4 a year ago. So that was a brief overview of the financials for the second quarter. And Stefan, I'll leave it over to you.
Thank you, Philip. So before we get into a Q&A, let me share our continued recognitions for our innovation and sustainability. So far during 2024, we have been awarded 3 new awards. 2 of them come from something called NCSPA, which is a US-based organization promoting, this is a quote from their statement and their mission, sound public policy relating to the use of corrugated steel drainage structures in private and public construction. And we won 2 awards in 2 different categories. The first one was in the retention category, where we, in Sweden, won an award for a bus depot, where we sold a solution with sustainable water tank solutions for harvesting rainwater, creating a very good circular water management system, thereby reducing environmental impact and allowing the customer to then repurpose the rainwater for washing the bus fleet instead of using fresh water. In the special application category, we were awarded Project of the Year in Turkey for a post-earthquake railway rehabilitation. This project included for us corrugated steel culverts and bridges and tunnels, and it comprised 4 different railway lines. And getting this railway traffic moving again quickly was economically critical, and therefore our solution fit very well to the customer's needs. And then the third award we have won so far was at the IFAT, which is the world's leading conference on water, sewage waste, and raw materials management, and a trade show very much focused on sustainability. And this was now for the second time in a row. First time was at this show in 2022, where we were selected this year among 3,000 exhibitors, and among 12 awards, we got one of them, and recognition for our commitment to sustainability in our daily business, and also the way we displayed ourselves and marketed ourselves at this exhibition. So this is very good to see, and we continue to be very well recognized for our strong economical solutions and also the good sustainability solutions that we constantly offer the markets. Right, I think that ends the formal presentation. So we open up for any Q&A at this stage.
Thank you very much for that presentation. And like I said, now it's time for the Q&A section here. And we'll start with the first one. You mentioned good prospects for a solid second half of the year, but how should we view the fiscal year of 2024? Can it still be a decent year?
We don't give a forecast for the full year at this time, but we do cautiously, I want to underline, expect a certain comeback of the markets in the second half of this year and into 2025. This means we expect to see continued volatility, but cautiously positive to a small trend change yet to be seen.
With inventory at low levels, is that a strategic decision or how should we view it?
We constantly work with our operating capital. We have done that for many, many years by now, in order to secure liquidity for further investments that we want to do in our business to continue to grow ViaCon. So this is a normal part of our work. And of course, this year with a softer market in the beginning of this year, we have of course been careful with our working capital in general.
With cash on the balance sheet, why did you utilize your credit facilities fully in Q2?
Maybe I can start and then you fill in there,
Sure.
Philip.
Yeah.
Well, it was a softer market, and you know, with less EBITDA generated than last year, we wanted to use our credit facility in order to plan for the next steps in terms of growing ViaCon. This is a very normal situation, and that's why we have this revolving credit facility. Philip, anything you want to add?
No, I echo what you just said. That's the reason for it. So nothing more dramatic than that.
Okay, and what were the primary drivers of the EBIT decline, particularly in the geotechnical solutions and also in stormwater solutions unit?
Just a second. Well, I think as Philip presented here, the main reason has been the lower demand on the markets. As I presented in the beginning of this presentation, yeah, that is the reason. And this mostly concerns traded goods, whilst our plastic pipe business actually has developed through very focused actions quite positively this year so far.
Despite a 2.2% increase in order intake, organic growth was only 1.6%. Can you explain the gap difference between order intake growth and the organic growth, and how currency effects and also inflation adjustments played a role here?
Yes, without going into too many details, because these are, of course, quite a lot of moving parts here. The difference is related to currency effects and adjustments for hyperinflation, as mentioned. And it's also an effect of Turkey being a larger part compared to the share Turkey had a year ago. And as many of you know, both the inflation and the currency situation in Turkey is a little bit different, to say the least, compared to the rest of Europe. So that's why we can see these differences between total growth, for example, and organic growth. So it's very linked to the currency fluctuations in Turkey.
Given the delayed impact of EU funds on the Polish infrastructure market, how confident are you in the project recovery later this year? And what is your strategy if the recovery takes longer than expected?
We are not confident. That's why we say we are cautiously optimistic about the near-term future and into beginning of next year and into 25 in general. We start the activities now. They have already started to further strengthen our competitiveness, comprising both efficiency measures where needed and where the potential exists, whilst also growing and supporting the growth of the very positive areas in ViaCon. So those actions will help us manage a continued volatility. We don't bet on the Polish market to come back very quickly, but we remain at least cautiously optimistic that it will do towards the end of the year and into next year. So we don't make ourselves reliant on that going forward. That's what I'm trying to say.
Okay, thank you for clarifying that. The Turkish market saw a continued high volumes due to the new infrastructure projects following the earthquake, like you mentioned. How sustainable is this demand, and are there any risks associated with this market?
I'm very thankful for that question, because if it was only reliant on the rehabilitation of railway lines from the earthquake, then there would be, of course, a limit to how much could have been done. But the recent orders that we have won have been much more in the general infrastructure industry and at a clearly higher level than even before we saw the earthquake effect. This talks about sustainable effects and the fact that we are gaining shares on behalf of concrete, and our customers in Turkey are also starting to see the value of this, not the least from a much faster installation and assembly of our products with exactly the same technical features as you can get from a strength of materials perspective and stability from concrete. So this we see as a trend change compared to before the earthquake, and we expect this to continue to be a larger part of ViaCon going forward. Then, of course, we hope that we can see a stabilization of the inflation and thereby the currency in Turkey over time. But the demand is there, and that's very, very positive.
We'll take one final question here before we round up. How does your recent Go Green Pioneer Award position ViaCon in the sustainable infrastructure market? And what specific initiatives are you undertaking to capitalize on the growing demand for these sustainable solutions?
Well, we don't need to do anything more different than we already do since several years. We show our customers the benefits of steel versus the alternatives, which is concrete and plastics. We hold different webinars with many of our customers to explain these benefits. We work very closely with all stakeholders in our value chain on the commercial side to show these benefits. And these awards, the three ones I just mentioned, is just recognition of the success we have and the facts we have behind actual installations and many reference case installations with those benefits all over Europe. I think that's the most comprising answer I can give at this stage. Or Philip, anything you feel I should add? Or we should add?
No, I think it's exactly that.
Okay, and that's a wrap of the Q&A section here. Thank you very much, Stefan and Philip, for presenting and also answering all of our questions. And thank you to everyone who followed this presentation with the ViaCon Group. And I hope you have a great rest of the day, and we'll see you next time. Thank you very much.
Thank you.
Thank you.